News Radio 600 Kogo, San Diego Business Saturday. Welcome to your weekend. I'm Sully. San Diego Business Saturday is on the air. And boy, do we have a show for you. Christina Gustin with UBS. RKG Wealth Management is going to be with us. I was going to talk to Ann Marburger from Padres Pedal the Cause. Will be joining us in then, of course, in featuring the CEOs of captains of industry in this fine city of ours. My good friend, Greg Houlgate, CEO of OSKA Wellness. They just secured $5.5 million in private equity financing. These guys are reducing the need for opioids with a really interesting little gadget, and that's exactly what it is. It's a gadget. We'll talk to you about it. San Diego Business Saturday is on the air. So let's talk about this interesting week whereby we saw the beginning of the week come off of record highs on the S&P and the NASDAQ, only to find out that we got very tepid very quickly on a number of issues. And I think one of them, of course, we can't ignore, was the Capital One hack. The other one was, of course, the interest rate, and the interest rate cut by Fed Chair. And the reason I'm stammering here a little bit because I'm trying to tell you why we even had an interest rate cut. Because how can you have a hawkish rate cut when you've got a solid stock market and you've got a solid economy? It was a head scratcher. What was the real head scratcher is when Jerome Powell decided to say, look, there won't be any more rate cuts for the rest of the year. Now, and that was significant for one reason and one reason only. And that is the fact that we've already priced in 2 rate cuts this year. And that's why it's a little dicey. So let me give you a little bit of a heads up as to how this whole thing plays out. Because there's a good statistical reason why investors should never be eager for a 50 basis point rate cut. And as I've said, we have priced in roughly a 78% chance of 2 decent rate cuts before the end of this year. So how does the market tend to perform in a rate cut regime? Well, here's first the good news. And keep in mind, on Wednesday, right after Jerome Powell cuts interest rates by 25 basis points, he says it's the only rate cut we're going to have this year. Dow then drops 1%, S&P drops 1%, NASDAQ dropped 1%. Now look, we're still staring down the barrel of 27,000 on the Dow, and we are, 3,000 is sort of the new norm for the S&P, and 8,100 is sort of the new normal for the NASDAQ. But I think what you need to realize is that since 1990, markets always tend to go up after rate cuts, which brings you to the bad news. And partly good news is the greater the magnitude of the rate cut, the weaker the returns over the coming 3 to 6 months. We didn't have a big giant rate cut here. It wasn't 50 basis points. The cut of 50 basis points since 1990 has resulted in losses in the coming quarter and half-year period. Part of that, maybe the fact that when you do a sizable cut, it's because the economy stinks at that time. That's why you do it. The economy's in need of help. Well, our economy's not in need of any help. This rate cut was billed as a so-called insurance cut, with the Fed sort of hoping to mitigate the harm of this long-standing trade dispute between China and the U.S. that Jerome Powell, Fed chairman, has described as creating cross-currents in markets and the economy. And he's right. And here's why it's creating cross-currents. Because we are a global currency. Everything in the world is priced in U.S. dollars. And this is why it's so important. So that's why you got slapped around a little bit with respect to the market midweek. And I will also tell you this, because I think one of the things that we probably minimized was the fact that, look, at our consumer confidence is at an all-time high. I mean, consumer spending is fantastic. but more than 100 million customers were hacked in this Capital One hack, including your socials, including your name, your address, your phone number, your date of birth, your credit score. There was other financial data. And look at that. That caused consumer sentiment to shift. I'm really interested to see what the consumer sentiment numbers are going to be, because it you know, if you ask how bad I mean, look at no account numbers and no login credentials were jeopardized, but still, all of the other actionable data was. So, and one of the things that we found this week, and I want to talk about this just for a minute, because I did a story on San Diego Morning News with Ted and LaDonna, which I think it surprised everyone, and that's the fact that one of the things that makes you vulnerable as a person that's participating in this economy is the fact that if you love credit card rewards and you can't get enough of them, it puts you at risk, at a higher risk than people that don't have many credit cards. I'll tell you why. Because our eagerness to score potentially lucrative deals comes with one major, often overlooked trade-off. It's the fact that since the rise of these credit card reward programs, it spawned a side industry of blogs and websites devoted to explaining the tricks that you can use to open new credit cards and rack up points. Now, it's not suggesting that you're doing anything fraudulent, but the more credit cards that you open up, think about this. The more credit cards you have, the more open lines of credit you have, you're increasing your attack surface. In other words, you're storing your data in more databases. There's a greater likelihood that your information is going to be breached. So that's part of this. Is I think consumer confidence took a little bit of a hit this week as well. Here to talk about that is my good friend Christina Gustin with RKG Wealth Management at UBS, and we've been on the phone a number of times this week talking about just you know, how some people are a little bit asleep at the wheel with respect to what they're doing with their retirement. You know, I think weeks like this and sort of complicated interest rate things like this, Christina, make those folks that don't invest more reticent to invest. So first of all, welcome to the program. Second of all, was this a head scratcher for you midweek, or did you think sort of that was going to happen? That there was a 25 basis cut and so be it. Let's just move on with the market.
Yeah, well, thanks for having me. Good morning. And if we could just start out talking about the hack for a second.
Yeah.
Public service announcement. If everyone listening would please monitor your credit in some way, whether it's a company like LifeLock or some other service like that, or these periodic free credit reports that you can get on yourself. That is one of the first things I tell people when things like this happen. I mean, there are ways to protect yourself, but if hackers are able to penetrate Social Security and the IRS, they could definitely penetrate all these credit card companies like you were talking about, and I think we're all vulnerable. You have to assume that if you give your information away to anyone, it can be hacked. So the only solution really is to really keep an eye on your credit.
And when you do that, by the way, there's a number of services that you can use. Paul Rudy over at KUSI asked me this week on Good Morning San Diego, is it worth doing the fraud protection services like LifeLock, Easy Shield, Identity Guard? Absolutely. It's $9.99 a month for the most basic version of LifeLock. And basically what it does is I get a text message on my phone. I'm a freak about my credit. So I've got myfico.com, I've got creditkarma.com, I've got Experian.com, I've got Identity IQ, and I've got LifeLock. I've got them all on there. Then again, I've had my identity stolen twice through the IRS. So for me, it's a big deal, but I also get text messages when something goes south like that. And I knew the second this thing happened with Capital One, because I happen to hold 2 Capital One credit cards. And thankfully, I don't have a balance on those things. And thankfully, it's been a while since I've updated any information. So who knows? I will tell you this, though, if you went to any of the credit bureaus and you sort of type in to see if your stuff is on the dark web, most of you it is. I don't think it's a matter of if, it's a matter of when at this point. So I have to agree with you. Let's get to the interest rate real fast, because this was a head scratcher for half of Wall Street. Half of Wall Street thought, what's the purpose of this thing? I think for me, I think it was an insurance cut, as I mentioned. It's sort of mitigate what's going on with China, because that's obviously, we are in a global economy. For you guys there, obviously, I know you guys don't pay attention to sort of the day-to-day swings of the Dow and the NASDAQ, the S&P, but you do pay attention to the global economies, and you do pay attention to interest rates. What was your feel on this?
Yeah, this is a really important event, actually. I 100% agree with you that it was an insurance cut. I think that there were 2 dissenting votes in the Federal Reserve's statement. It wasn't really unanimous that we needed this cut, like you stated. I think the news and the market volatility that resulted from the Fed action kind of obscured something that I think is more important, that corporate earnings are going on right now, and they've been mostly positive. I think something like 76% of companies have topped their profit estimates. So I agree with you. I think the fundamentals are still really strong right now, and normally you wouldn't get a cut like this, a cut at all, when you're still dealing with a strong economy.
I think it was a little bit of a surprise and I think most of us will agree that the market has priced in 2 rate cuts for the year, and I don't think there's not going to be another one. And I think part of that was a little bit dicey for many investors, thinking that, things are going great, but we thought they were going to be greater. Look, I don't think it's a foregone conclusion that we're not. I just think he thinks that the economy is doing much better than many of us do. Christina, stay right there. I'm going to keep you over just for 1 second because I yammered on too long in the very beginning, but I want to spend some time talking about a little bit more what's going on in the market and such. And of course, I have an interesting story to tell. No names, but just how important it is to have a money manager. I'm going to bring you through that for a minute here. It is San Diego Business Saturday. It's News Radio 600 KOGO. More from Christina Gustin. Just a second, step by.
What's this co-reaction?
Hey, the weekend's here. News Radio 600 KOGO. It's San Diego Business Saturday. I'm Sully. Easy to get a hold of me. All social media at Sully Speaks or Sully on the Air. Or just go to bigbizshow.com or go to kogo.com, keyword Sully, where you can watch the TV version of San Diego Business Saturday. Every single Saturday, starting at 10 a.m. as soon as the radio program's over. The powers that be post the TV version of San Diego Business Saturday up at kogo.com, keyword Sully. Okay, so real quick before I get back to Christina Gustin, I was going to talk to Ann Marburger from Padres Pedal, but I had our dates mixed up, so we're going to get her on for next week. But of course, Padres Pedal the Cause, a fantastic charity. And again, coming up in just a few minutes, OSKA Wellness. Greg Houlgate, CEO of a Carlsbad-based company, is going to be checking in with us to talk about this new capital infusion, about their personal device to decrease pain, which I, by the way, have experience with. They are not a sponsor of KOGO. They're not a sponsor of the Big Biz Show. So when I endorse this as as just a human, I can tell you this is a really interesting product. And basically their website says, as our TV audience can see, imagine your life with less pain. So this isn't going to be an infomercial for OSKA, but I will tell you it's a pretty cool device. It's more about how they started the business and so on and so forth. Real quickly, I want to talk a little bit about a couple of San Diego stocks that have made the news recently. Of course, Qualcomm, in their never-ending sort of issue with fair trade and such, either with the FTC or with other countries, just got slapped with another fine this week on predatory pricing. I'm not going to break that down this week. I'll break that down for you next week. But boy, Qualcomm had such a run for a while with respect to what their chart was looking like, and I can tell you, man, it took such a great, it was doing such a great term back in April. Where I think it went, once that FTC thing came out and the Apple settlement came out, it was, it went from $58 a share to $85 a share, and stayed there for a short amount of time, and now it's sort of stuck at 78, just going sideways. I think, during this week, it seems just as they get momentum, it went from 75 to 74 on that news that there was another fine coming at him. So just a buyer beware on that. It's just, for me, Qualcomm's not going anywhere. These guys are completely involved in the global economy with Huawei and everything else. Their outlook doesn't look great. Are we in correction territory with this? I don't know about that, but I can tell you that their earnings per share is $1.75 versus 81 cents a year ago. So I would argue that they're doing well fundamentally. But man, I'll tell you, it's a head scratcher to me, just how much flurry and news and noise is going on in the international markets with respect to Qualcomm. The other thing I want to talk about is gold. Gold. Remember when gold came in so much favor in the last 6 weeks and such because of the China trade deal and such. You look at gold now, and by the way, in looking at gold, just back in October of 2018, gold was just close to $1,200 an ounce. It's still at $1,400 an ounce, but now it's starting to go sideways. Dropped a full percentage point this week on the rate cut. So just something to keep your eye on. There's a stock symbol GLD. GLD is a exchange traded fund for gold. Another one is IAU, and this is a basket of gold stocks, but you can sort of track to see how the entire gold industry is doing, not just the physical gold, by taking a look at some of these stocks, GLD and IAU. And certainly just it's interesting to sort of juxtapose how those commodity-based exchange-traded funds do against general market conditions. So Christina Gustin joins us. She's with UBS and RKG Wealth Management. And one of the things that I thought was interesting is this rate cut was supposed to settle the markets. That was the idea. And this sort of hawkish rate cut could be good for the stock market in the long run, based upon how markets sort of react. But the bigger question for me is, how do individual stocks react? And Christina, do you guys put any value at all on in portfolios when you see rate cuts? I mean, you guys aren't shucking and jiving and reacting. You guys respond to more fundamental sort of approaches, and you sort of stick with your guns on whatever the individual client's investment objectives are. Was there any knee jerking going on, with the institutions? Was there any knee jerking going on within the walls of RKG and UBS about this interest rate, or was it just another day on Wall Street and the rest of us are just our pundits are the ones making the big deal out of it?
So it's a really good question. I think that there are a couple different dynamics going on. This is significant because, like you said before, it was the first rate cut in more than 10 years. And the reason the Fed does this is to indicate that they are going to continue to try to support ongoing economic growth, right? So they do that by supporting risk assets and driving down the return on safe assets like bonds and cash. There is the belief that rate cuts can be positive for the stock market because, for example, dividend yields and also just growth in stocks generally is now more attractive. If in your safe money you're only getting, 2%, you're barely keeping up with inflation. So the problem with that belief or that move, if stocks become more attractive and you start overweighting your portfolio in equity investments, is that you're really re-rating your risk. You're going after that yield, but you are taking on a lot more risk in terms of volatility. So especially for our retired investors and our more conservative investors, we have to be very careful with that. And in my view, it has a lot more impact on the fixed income, the bond market, than it does on the stock market, because if rates continue to be lower for longer, that kind of changes the whole dynamic of the fixed income market. And I saw a really incredible stat a couple days ago that outside of the U.S., 43% of the global investment-grade bond market is trading at negative yields. So what that means is that you have all of these global investors flooding into our fixed income markets to get return because their bond yields are less than zero.
Yeah, right.
So
right.
All of a sudden,
it's actually, you have to pay money to put your money in the bank.
Yields look really attractive.
Well, what's interesting here is what people don't understand too, Christina, and I think this is you make a really good point here. When interest rates go down, everybody thinks about my mortgage rate's going to go down or my credit card's eventually going to go down. But what they don't realize is your saving rates also go down. So so it's almost like cutting off the top of the blanket and sewing on the bottom of the blanket if you are a saver versus an investor, because the words saving and investing are sometimes used interchangeably, but when it comes right down to it, we should be engaged in both separately to sort of secure a financial future. True?
Very true, and I think more than ever in fixed income, you need expertise guiding you because it's really easy to get in trouble in the fixed income markets these days.
Well, and I've always said this to people that call the show or have emailed me over the years. You save for things. You save for things that need a vehicle to sit in. I mean, you need to save for stuff that when you need something, they've got a low risk of losing value. Investing typically carries a long-term horizon. Such as our children's college fund or retirement. And the biggest and most influential difference, in my opinion, between saving and investing is, of course, risk. And to start, the biggest and most influential difference being risk means that you're not going to see a lot of risk with savings, but you're not going to see a lot of return with savings. And that brings me to, I know of many friends that just either are not sophisticated in investing, are afraid of losing money, have spent their lives since the Great Recession just listening to headlines, but have a significant amount of money in their savings account. And I had one such friend whom will remain nameless, but the reason I bring this up is because I wanted to introduce this person to Christina, because there was a substantial amount of money. In my mind, if you are at the age of 40 years old and you have more than $50,000 sitting in a savings account, unless there's a really good reason for that, you're losing dough. And it doesn't really matter the number here. And I'll just say that every once in a while, how much money I have and say, who cares? It's really, this is a chat about the difference between saving and investing and about losing opportunity when you're really going to need it. Christina, I want to talk about that a little bit, because when you see these big numbers in savings accounts, you say, well, God bless you for saving money. But there is that double-edged sword here, isn't there? Because you're losing out on opportunity, because at the end of the day, most people's objective is that they're going to be okay. I want money in the bank so I can be okay. Well, that conversation starts turning into, I want money in the bank so I can be okay in the future. It gets a little dicey, doesn't it?
Yeah, and that's the power of the financial planning process that we go through for our clients. So when someone comes to me and says, I have all this money in the bank, am I going to be okay? I can show them mathematically, here's what would happen 20 years from now if you leave your money in the bank. And here's what would happen mathematically 20 years from now if you invest in a moderate or even an aggressive portfolio based on historical yields, right? So over time, you're definitely, we can quantify, using averages, we can quantify what that lost opportunity is, and then the choice becomes very easy, right? If you assume an average lifespan, let's say 89, 90 years, you want to retire at age 65, you're going to have a lot of years to fund your living expenses. And usually with cash, it's not going to get you there. Yeah,
and that's the scary portion of it, is that you might be safe, but you're not going to get there. And I don't think you want to be a Walmart greeter at age 90. At least I know my dad doesn't. Christina, thank you so much. Christina Gustin, UBS Financial, RKG Wealth Management. She gave me 2 segments today, only because I was so mouthy in the beginning. All right, San Diego Business Saturday continues. It's News Radio 600 Kogo. Coming up, the story of OSKA, a company here in Carlsbad. Stand by. News Radio 600 Kogo, San Diego Business Saturday. I'm Sully. Great to have you along on this Saturday. Catch me every morning with Ted and LaDonna on San Diego Morning News here on News Radio 600 Kogo. Also, KUSI, Good Morning San Diego, and you can check me out there on their website. Also, Russ T. Nails and I going on our 23rd year of the Big Biz Show, our nationally syndicated radio program that also happens to air in 110 million television homes across the country on national TV. BigBizShow.com if you want to watch some of that. Speaking of watching, you can watch San Diego Business Saturday. Yes, we are a radio program that you're listening to in your car, or you're listening to us on iHeartRadio. But you can also watch us on the Kogo website, kogo.com, keyword Sully. Right after the show today at 10 o'clock, mean producer Lady Mary puts up on the website the television version of the program. And I'm so happy to introduce whom I call a really good friend of mine and just one of the greatest guys I've ever met. And I met him through another friend through Challenged Athletes Foundation. And I need to take a second to talk about CAF for a minute because once again, for my 9th year, I am riding down the coast of California from San Francisco to San Diego. Actually, it's Palo Alto to San Diego this year. Roughly 700 miles in 7 days. Mayor Kevin Faulconer joining me, former police chief Shelley Zimmerman joining me personally down the coast this year, along with 100 other of our closest friends and some challenged athletes. And I'm really happy to be doing that again. We're raising money. We'll kind of start banging the drum for that a little bit through your generosity right here on News Radio 600 Kogo. Between Big Biz Show and Kogo and KUSI, over the last 9 years, I've raised, I think, close to $250,000. There's been a couple of Kogo listeners who have brought in checks for $5,000 and $10,000. And the reason I bring up CAF is because Greg's wonderful girlfriend and I were friends riding down the coast and training for this. And a couple years later, so I see her hanging around this guy, and of course, playing Big Brother here, I wanted to get to know him, and he and I became really good friends. I'll tell you where I met him. I met him at a restaurant in Del Mar, roughly 2 weeks after my first full knee replacement. And I was having trouble recovering, not because of the knee. My knee was fantastic. It's because of sort of the way my injury happened. My quadricep, my thigh muscle, had a massive amount of inflammation after the surgery. And it was the size of a watermelon. My knee was great, but because of some muscle tears and stuff that happened. So I'm sitting at dinner and getting to know Greg Houlgate, and I see he's got this blue little disc that looks like a mouse on the table, and he turns it on. He goes, "I want you to put this on your leg there." And we start talking about it. I'm thinking, okay, this is one of those infomercial devices that's not going to do anything. Little by little, I start talking to him and realize that this is a technology-driven wellness solution. And I'm going to fast forward and I'll let Greg tell you the rest of the story. But I went to bed with that thing on my leg, and I kept turning it on because when I wake up in the middle of the night or I turn over, I kept on hitting it. And literally, I'm going to say 36 hours later, no, I think it was 24 hours later, my inflammation was gone. And again, I'm going to say, OSKA Wellness is not a sponsor of Kogo. They're not a sponsor of the Big Biz Show. So there is no agenda here. I'm just telling you, this is one of these things that just happened to work for me and happened to work for a lot. But I want to welcome you to a good friend of mine and the CEO of OSKA Wellness, who just, by the way, secured $5.5 million in private financing from some pretty key individuals around San Diego to advance the cause. Greg Houlgate. Greg, thanks for coming on, man. Good to see you.
Hey, Sully, thanks for having me on the show today.
So here's my question for you. You've been in this studio so many times for the Big Biz Show. I think I've even introduced you. I think I've even interviewed you for Kogo in the past, and of course you live in San Diego. I see you all the time. Yet you're on Skype here today, and you're not in studio. Where are you? You're in another part of the country, I'm assuming.
I'm in the beautiful city of Sioux Falls, South Dakota, where we manufacture our product about an hour north, a place called Clear Lake, and working here with the beautiful people and that are fighting this battle of chronic pain and opioid epidemic at Sanford Health and Avera Health and the other groups here in town. So
I've got to talk about this for a minute, because this is an over-the-counter, available online, also available in your you actually have a store up in Carlsbad, but it's available in a number of places. You go to oskawellness.com. But by the way, this is a pain management device, and I describe it looking like a disc or a mouse. It's about the size of a mouse. It's still the size of a mouse. But why don't you take a second, because I want you to describe for people who are listening to us on the radio, if you had to just describe what it is and how it works, why don't you take a few minutes to talk about it?
Sure. So the OSKA Pulse is based on a very sound clinical data. We like to call it a 60-year overnight success. So the technology's been in clinics and hospitals for 6 decades, and it uses a technology called pulsed electric magnetic field. And and it generates a non-ionizing electromagnetic field, which is clinically proven to reduce inflammation and pain by increasing circulation and allowing the body to recover naturally.
So let's talk about that for just a second, because, people are skeptical. I was skeptical when you were sitting there, even though I go, here's a nice guy. And he's a friend of mine's boyfriend and smart guy. And I'll get into your background in a second, because your background's really impressive. And, we hit it off immediately because of your credibility and the fact that, here's a real guy, and we talked business. And what was interesting is I started thinking to myself, well, most people want to take a pill. Most people want to get like some bandages and some ice or some heat and something that they can actually feel or be tactile with and have this thing work. And when you look at this thing, it is sort of a head scratcher, but I can tell you, to the man and to the woman, and I'm talking 50 deep in my life that have tried this thing, it really is one of these things that you can't really feel. You can't. There's been people describing as maybe a warming sensation, but most people, you sit it there and it works. You sit it on the desk and it works. Talk about that part. Is that sort of a pain point for you, that you have to counter, an objection that you have to counter because it's not buzzing, it's not beeping, it's not pulsating necessarily? Is that something that you've had to battle a little bit with patients?
So I think absolutely, that's a clear point of differentiation for our product. It is non-invasive, which means that it works with your life the way you work. So it's not going to buzz you, shock you, zap you. You can wear it over your clothing. You can stick it in, like ladies put it in their purse and use it for hip pain. They walk around with their purse all day. Athletes stick it under their sleeve when they're pitching between innings. People that have chronic back pain put it on the strap and wear it on their back. It is the easiest non-drug pain relief device technology you could find anywhere on the planet.
So this is interesting, because I do want to talk about this, because part of your passion here is to help people live active lives with less pain and without drugs. And I think that's part of this thing here, because and I'll tell you, let me describe the first time Greg was in the TV studio with me. Is, of course, we have this TV studio, and we've got cameras and microphones, and we're about to go on the air, and Greg pulls out the OSKA Pulse, which again it's shaped like an egg, it's blue, it looks like a mouse, it looks like a wireless mouse, and he turns it on, and we start picking up. I don't know if you knew this was going to happen, Greg, but 3 feet away we start picking up this zzz thing, and basically, it's because the microphones are so sensitive, we could sort of hear this pulse electromagnetic frequency that you can't hear with your ears. Then we realized this thing doesn't even have to be sitting on your skin. It can be 3 feet away or 2 feet away. In other words, I used to go to bed at night, turn it on, and set it literally next to my pillow, and I'd get rid of neck pain, or I would set it near my knee. They certainly have the wraps you can put it on your knee, but talk about that piece of it, because there's a field here of that it's still, the efficacy is still involved and 2 feet away. Yeah.
So the reality is the field's about the size of a beach ball. So I love to bring this little out to show people that that's kind of the size of the field of the device.
Wow.
And what it does is, because the signal is being sent out from the device, and here's a medical version of the device, and as it sends a signal out, you get a benefit of increased circulation across all the systems of your body. So nerve, bone, soft tissue, joints, your circulation, and that includes your lymphatic system, which is key to allowing the body to recover naturally. And so because that field is so large, it works across a very large area of your body, depending on your size and where your issue is. But your body doesn't know the difference between pain, whether it's coming from your neck or your knee or your back. It just knows inflammation. And inflammation is simply an area where the body is not allowed to operate the way it's supposed to.
Okay, so I got to ask this, because you live in a town in San Diego. By the way, Greg Houlgate is with us. He is the CEO of OSKA Wellness. You might have read in the Union this week that they just secured $5.5 million in private equity funding, and I happen to be a friend of his, so I get to pull him on the air and do a long form interview. But what's, I think the biggest piece of this thing, Greg, is the fact that you're living in a medical town, man. You can't make comments and you can't make claims without scrutiny. Now, let's talk about some of the scrutiny, because you have passed muster with some of the biggest names in medicine in the world. Talk about that.
Yeah, so everybody who's invested in our business is a user of the product. So guys like Denny Sanford. I mean, Denny's given away over $1 billion to healthcare, from children to cancer to stem cell. Guys like Keith Valentine, who have really revolutionized the way people look at back implants, from NuVasive, now at C-Spine, to Les Cross, who is the chairman of DJO Global, a Blackstone portfolio company that's been helping people get back to action without pain. Our list of investors goes on. And the reason why they've invested is that they use a device just the way you have, Sully, and has changed their life.
Well, and the other piece of this thing too is, you've got these medical centers around town that you've actually been in front of, and I think that's a big piece. Stay right there, Greg. Greg Houlgate, the CEO and founder of OSKA Wellness, San Diego company, as we interview yet another San Diego CEO. If you want more information, go to oskawellness.com. Imagine your life with less pain. We're going to talk about the business side of this thing in just a second. San Diego Business Saturday, News Radio 600 KOGO. News Radio 600 KOGO, it's San Diego Business Saturday. Welcome to your weekend. I'm Sully. Catch me every morning on the San Diego Morning News with Ted and LaDonna right here on News Radio 600 KOGO. Also, KUSI, Good Morning San Diego. And of course, the Big Biz Show with Rusty Nails and myself at bigbizshow.com. My good friend Greg Houlgate with OSKA Wellness, one of the co-founders and CEO. Company founded in 2015, a pioneer of technology-driven wellness solutions. How about drug-free pain relief? No, they are not a sponsor. They don't sponsor Big Biz. Actually, I think Greg gave me one or two of these things 3 years ago when I met him. Since then, I purchased all of my OSKAs. And by the way, it's amazing. No side effects, non-invasive, lightweight, portable, shareable, all without medication. And you've passed muster with also the medical community, haven't you, Greg? And that's a piece of this, correct?
Yeah, we just we completed a study about 1.5 years ago over at Scripps La Jolla. We did a randomized double-blind placebo study, the same way a pharma company would do it. And we came back with, in 2 weeks, we had people clinically validated for reduction in pain. And the placebo group, interesting enough, had a net zero effect. They actually had no benefit, which is counter to even what pharma would find. Pharma would find at least 30-40% benefit from a placebo. But if the device isn't working, you're not getting better. So we know the device works, and the science is really, really good there.
Yeah, it's now you've got key partners as doing some research here, and there's a number of places that you can buy this. You can buy at oskawellness.com, fsastore.com, and I'll put all these up. You can Amazon, obviously, and those things. But you can also get OSKA Pulse from your doctor, right? And you've got Scripps Hospitals and Interactive Medicine Clinic and Sanford Health and Kaiser. Those guys aren't going to sell your stuff unless it's working, right? I'm going to say that's a pretty big endorsement.
Yeah. I mean, Kaiser, as an example, got involved because in end of 2017, the docs didn't get their bonuses. And the reason why they didn't get their bonuses is because the drug costs were so high. So in 2018, they approached us and said, look, we've been using a device, kind of behind the scenes for the last 6 months. We think this thing's amazing. And not only are they scripting the device for their patients, but they're actually working with us on doing clinical trials. On the most complicated patients for pain, which are knee surgery patients. And I have an own personal story about that, because I know you have yours, Sully, but my mom's 86, just had a total knee replacement, 10 days post-surgery, no drugs, because she's using her OSKA Pulse. Day 15, her doctor said, I've never seen a patient in my 40 years of doing knee surgeries that can walk in here without drugs, and I'm going to release you to go drive home now. He just was in shock.
Yeah, well, I can tell you, I've got a second one coming up after the ride, Challenge Athletes Foundation ride down the coast in October. My next knee surgery is in November, and I can tell you this will be right next to me the entire time. Let's talk about the business side of this thing, because you did just raise $5.5 million. It has been you've had a great sort of run with this business. What's next for you? Is there any technology you have? Any technology bars you have to cross? Is there any business? I mean, is this thing going public? What is the trajectory of the business? And keep in mind, our audience isn't necessarily business folk, but let's talk about the that side of things. So just pull the covers back on being a CEO of a company who just raised $5.5 million.
So the next big step for us, Sully, is we're going to have our device available across the country at healthcare systems all over. So the reason why I'm in the Midwest today is that Sanford and Avera and other doctors here in the Midwest are starting to deploy it. We're with the NIH and the National Institute of Drug Abuse. So NIH is National Institute of Health in DC next week, and they're working with us on doing studies to help validate and to promote the product. The FDA is working with us. We have new product iterations coming out over the coming year, which will help connect patients, their docs, and their insurance companies quicker, better, easier, so we can get greater coverage and greater results of using the device.
So with where you are right now in the business cycle of things, I know I know when I look at where you are, does this money, and I think a lot of people when they hear, well, this company raised $5.5 million, they're done. Well, you certainly could be done. I mean, if there's no more research to be done, the product's made on the street, this could be marketing money, it could be a number of other things. Are you done raising money, do you think? And I know, keep in mind, ladies and gentlemen, this is a privately held company. Greg doesn't have to tell us anyway. They're not publicly traded, so everything he tells us is voluntary. But I mean, when you do money what should people know when a private company raises money like that? Because it's certainly, for Johnny Lunchbucket and myself, it seems like, boy, that's a lot of money. Those guys probably never have to raise money again. Boy, sometimes that's not the case, is it? Sometimes there's things that come up, and sometimes this is just part of the business cycle, right?
Yeah, I mean, I think the reality is it's taken us a few years to raise the money. We are fully commercially exercising every day in the marketplace. There are going to be other challenges for the business as we continue to expand, and we'll probably need additional capital. We do have some strategic partnerships that are lining up, which will be announced as we go. And, there's always opportunities for partnerships to take us out of the business and maybe expand us into other areas. So we don't know exactly what the future holds, but I can tell you the future is bright. And we're solving a really big problem every day by getting people off of drugs, letting people get back to active living, using our device. It is exactly what our mission is every day, is to help people get back to regular living without drugs.
We'll talk about that for a minute because there's 100 million people who suffer daily from chronic pain. And I think, people tend to get used to it. And I think people get desperate into trying to figure that stuff out. There's the hydrogen water ionizer that you can buy, or the muscle stimulator, which works fantastic if you know what you're doing with it. And by the way, I exercise with muscle stim, which by the way Greg told me about. But then but the big piece of this thing is that I no longer have Flexeril in my medicine cabinet. I no longer have Celebrex and those are all. I no longer have colchicine, which are all inflammatory medicine or inflammation medicines. And it's because of this. Isn't that the idea, is to sort of get rid of it? And then, of course, on top of the inflammation side, you got the pain side, which is opioids. When I first met you, that was one of your biggest, I guess, drum beaters, is that you wanted to get rid of opioids and the opioid crisis. How is that going overall?
So I don't think you actually get rid of opioids. I think what you do is there are patients that need pain medications, but most people, if you talk to them sincerely, they really don't want to be taking harmful pain meds because it destroys their GI tract and makes life very hard on them. And so our mission is to help people get back to active living. And by doing that, you really kind of liberate people in their life. And when you see someone who's been on pain meds for 10 or 15 years, and then 3-4 weeks later after using our device are 100% off their pain meds, kind of the way you're off your anti-inflammatories, it changes everything in your day and allows you to function and do things that you couldn't do for a long time. And so really that's the mission. If you ever
run into Greg at a restaurant, and not necessarily because he's with an investor or he's with a business person, he typically will have this in his pocket. You'll have it in your back pocket, or you'll have it sitting on the table, and not to demonstrate. You're using it, and I am now used to having this in my car, where I just literally set it. Sometimes I just set it on the console in between, but sometimes I'll set it near my knee or something like that. But I'm not necessarily trying to smack my knee. Sometimes it's just, I know that I'm helping myself out here. A lot of the pictures show that people have this thing wrapped around them. You don't. Again, it doesn't need to be. You just need to be near it. With respect to the bio, I guess the medical device industry here in San Diego. Are we on an upswing? Is this? Are you reinvigorating this? Because we hear about biopharma all the time. We're certainly hearing about CBD. We're certainly hearing about biotech all the time. But what about medical devices? Because it seems like you have single-handedly as a company breathed new life into the bio, or I should say the medical device portion of the biotech industry. Yeah.
So I'm super humbled by that comment. I think the med tech in San Diego is global leading technology. And there's a lot of different companies out there doing it. Most of us aren't doing it without a lot of support at home and from our strategic partners and investors. And so we are definitely on the front of that. Electroceuticals, which is a catchphrase for med tech devices like the OSKA Pulse, is where people are going. They're stepping away from a pill and they want to look for technology to help them benefit their life. And so we're definitely leading the charge in that. And we're very passionate about it, as you can tell. And we're very proud of the fact that we're in San Diego and we manufacture the product in the U.S. And I think a lot of companies are trying to figure out a way to do that better every day. And San Diego's a leader.
Are you guys planning on staying in San Diego, Greg, for now? I think that a lot of people there's a lot of eyeballs on you after the UT article, and of course after this show here, there's gonna be a lot of people taking a look at you. Does it change the landscape that you are in? Sort of the medical and innovative economy here in San Diego. Does that help us?
Yeah. So our base is San Diego, but we're a global company. We serve doctors, patients, and consumers all over the globe. And so San Diego is the place for medtech. I mean, if you drive the I-5 and I-15 corridors, it's very hard to not see medtech companies all over the county, and more so than anywhere else in the country.
Greg's 30 seconds or less. What's next for you guys for OSKA Wellness? And first of all, congratulations on being a pioneer of tech-driven wellness solutions. Congratulations on your equity raise of $5.5 million. Congratulations on the success of OSKA Pulse. OSKAWellness.com. What's next for you guys, real quickly?
So we're just going to continue delivering world-class product to help the 1 in 3 Americans. Again, that's over 100 million Americans get out of pain without drugs and get back to active living. And that's our mission, and we're going to stay with it.
Well, good. So listen, we're going to keep obviously following the story, and always great to see a friend and a colleague hit it out of the park. Greg Houlgate, CEO, co-founder, OSKA Wellness, OSKAWellness.com. Probably read about him already in Forbes or the UT or Wired Magazine or Inc. Check him out. Pretty cool stuff. Yet another captain of industry here on San Diego Business Saturday. Speaking of which, it is San Diego Business Saturday, and it's the weekend, so get out there. I'm Sully. Catch me everywhere at Sully Speaks. News Radio 600 KOGO.